traders. This is Blake Morrow. You're listening to the Morning Edge webinar. We're going to get started with our morning analysis. And Kevin said something like, "Yeah, didn't you say you were going to stay in the euro dollar if it stayed below 110?" And I did. And but when I was sitting on the golf course, I'm like, you know what? I don't even want to deal with this right now. I remember that was kind of like my attitude when I was like on the second hole, and I got in the golf mode, and I'm like, you know what? Why am I even trading the euro right now? And I'm like, I remember at that moment, I was like, I had a cup of coffee in my hand, and I'm like, I'm done. I'm done with the euro right now. And I just took my, couple of pips, and I remember just not, refreshing my memory now. I'm just like, yeah, I'm done with it. So anyway, I'm just not even like, I look at the euro and I'm very unmotivated about trading it at the moment. But that doesn't mean that won't change. And I think a lot of it's going to be how it reacts to these current levels. So let's go over to the euro dollar and let's talk about it. And by the way, I'm going to have to redraw everything because I remember at the end of the day or at the end of the day on Friday, at the end of the session before I left, my systems froze, and after the jobs report, and I did, I lost like a lot of the lines that I drew. So we're gonna have to end up redrawing a lot of stuff. Okay, so here's the euro dollar. All right, so first and foremost, we're as you can see, we're challenging some pretty key resistance. So this is the resistance that we're dealing with. Ultimately, this might be a little cup and handle pattern. We have a nice little hourly triangle here that might build into something. It's hard for me to get too super excited about the euro at the moment, just because I know that so much of Europe is on holiday at the moment. So I don't want to get too terribly excited. However, if you look at the longer term of the euro dollar, here's where we're at, and what's going to be really key is if we can break back above 111, because I think this is where a lot of the squeezing is going to start. And again, I would be more of a proponent of selling the euro at a little bit higher of a level, maybe around 112 or so. But what we're going to have to do from here is really see how big of a pullback recovery we can get in the euro dollar from a Fibonacci and a trend line standpoint. So my first fib levels will probably be drawn from this point here. Okay, we're at a 24% retracement. A 38% retracement is going to take us to 112.70 or 112.50. We've run these fibs before, and this 38% retracement also coincides with this. You can see there's a lot of support through here, and as we broke through that support, it brought a really nice breakdown. Okay, and you can see we had this nice little shelf of support right there. That seems very doable to me, especially if we start breaking up, above this 110.50, area, 111, trading back up towards 112.50. It's like I said, it's extremely doable. Now, those are prices that personally I would use as an opportunity to get short the euro dollar. Okay, do I want to short it here? Where we're currently at? I don't know. I was wondering, if the whole reason why I sold the dollar, thinking about going back to Friday, the whole reason why I sold the dollar at that point was, when we got the spike up in the euro dollar, I was wondering if risk aversion was going to pick up so much that the dollar would become, would go from being weak to strong. And because we didn't get that, the dollar really strengthening a whole lot, that's when I was like, forget about it. I'll play it again at some other point. All right, so from here, let's take a look at a couple of these, steep downtrend lines that we're going to be dealing with on any type of rally back. Okay, Hmm. Want to do something really fast because I'm going to make an assumption at this moment. We're gonna have a breakout. I don't know if that's necessarily going to be the case, but I want to prepare for it. So if we do break out, that's what I was thinking was going to happen. All right, so we have 161% extension. It also comes in at 112.60. If this is that the last downswing, to mid range, going from 110.50 to 105. If for some reason we do break out, so let's say that resistance gives way, okay, which very very easily could be the case. If that resistance gives way, the 161% extension will come in at 120 or 112.60. That also is that previous support through here. Okay, so that's going to be key. If we can break this 110.50 level, that would be my assumption. That my assumption is this is where we're going. Okay, right to here, and that means if we break like this, I want to get on the short side of the euro dollar up here. Now that's all if you know if we break through 110.50. So 110.50 is obviously going to be key. We got 110.51, and that's going to be our initial, 110.38. Yeah, so 110.50. That's going to be key resistance for today. That is critical. Okay, we are still in a range trading environment. Okay, where's support? So support today. Mm, I gotta tell you this conversation I had with uh, the, this, I'll have to tell you here in a minute. I'll wait till I'm done. Um, Very interesting conversation I had with a very high up person at Cisco. I'll tell you guys here in a second. All right, so we have this here. I mean, this is a Friday's price action. Okay, we came down to one. We closed that low. We closed at 109.60. All right. Obviously gapped up, and we've been bouncing around. So that is going to be really key support. So 109.60. You can see the spike low right here. That was the low that we had from Friday. So 1.0960. That's really key support today. And as long as we stay above that 109.60, I think you need to remain in the, buy the dip camp, just intraday, from an intraday perspective. Um, especially knowing that well, at least what we know is that Greece seems like they're going to make their payments here to the IMF at the end of the week. So, buying dips in the euro dollar to 109.60, might make sense. Like if you, or if you do get long the euro dollar right now, keeping your stop below 109.60, that would be the play. Let's go talk about the cable because somebody said, that I was looking to short the cable, on Friday. I didn't, or I short the euro pound, excuse me. I did not end up shorting the euro pound. I did not. We can take a look at it though. I haven't even looked at it yet today, but let's go take a look at the cable first of all. All right, so here's the pound dollar, and the pound dollar got that move out of the triangle that we drew on Friday. This is the triangle extension, which we're getting close to. All right, and let's go over to. This is an interesting chart for a couple of reasons. Um, First of all, Okay, so here's your daily chart of the cable. This false breakdown here, okay, that's got to be concerning for bears. So if you're bearish to cable, whoops, I didn't mean to do that. Grab that one, remove it. So if you shorted the breakdown, or you got out of longs because of the breakdown through here, um, obviously you're looking at the cable right now going, ah, oh, damn it, I can't believe I got short, or I got out of my longs. And now a close, you can notice how all the candles here, there hasn't been a close back above 150, not in a couple of weeks. And so if the cable starts squeezing here, and we can actually close above 150, I think that'd be a pretty bullish event for the pound dollar. You can see right through here. So I don't know if that's necessarily the resistance today, but I think from a closing basis, that's going to be pretty important. So 150 seems to be, I mean, it's not going to be like super important resistance. I think it is resistance though. Okay, we're in a range. If we can close above 150, we might start to see a little bit of a squeeze in the cable. Now, I want to take a real, well, before I do that, let me go ahead and take down support. Let's get rid of this. You know what we'll do is we'll move that back down here so you can see what's holding. So while we're above 148.70, that was our previous resistance, that is now support. Okay, so cautiously being long down here, just knowing as long as you stay above this red support, previous resistance, that should be a current support. You probably want to be nibbling to the long side, but don't get too aggressive while you're below 150. I think if we can get a close above 150, that's going to provoke a bit of a squeeze in the cable. All right, let's go ahead and take a look at the dollar Swiss over the Swissy. So here's the Swissy. Now, just I know you guys already know this, but I'm out of the Swissy. I was more worried about Greece this week, and I didn't want to have any Swiss short exposure, just in the event that Greece missed a payment to the IMF. You might see near term near-term strength in the Swiss franc, even with negative interest rates. So I wanted to make sure that I didn't have any exposure there. But you can see now at this point, whoops, our the levels are very well defined at this point, as far as I'm concerned. Let's get rid of this. You guys, excuse me 1 second. Give me 1 minute, please. Sorry about that, folks. So the levels are really well defined here in the Swissy. Okay, um, this move lower. Okay, you see that trend line that we were dealing with. Okay, that move lower, we retraced to a 38% retracement. So it's very shallow. So when you get a shallow retracement like this, okay, probably going to do A, B, C, D. So this should, whenever you get a 38% retracement, the follow through should be pretty damn good on the downside. So as far as the Swissy goes, we're probably looking at a move back down towards 92, 91 cents realistically if we start breaking down. So with that being said, okay, that spike low is going to be very important. That comes in at 94.80. Okay, 94.80. It's going to be pretty important support there. And then resistance, as long as you stay below this 95.50 or 95.60, probably not much reason to be on the long side of the Swissy. We're in a range, but we might, like I said, we might start breaking down soon. All right, let's take a look at the dollar yen. Um, Now the dollar yen is holding above. At this point, it's holding above 119. But it's all about the futures at this point, I believe. And right now, we're holding. You can see the 786 that held us. We have a flag pattern. It's currently in play. Very easy to see at the moment. What that means is, we could still pull back here to maybe 119.25 or so, right? But eventually we're looking for a breakdown below 18, 118, whatever the spike low is there, 70. So we're still in a range, but if this flag pattern plays out, which below 1870, 1870, you're targeting a move down to 118 at least. If you think about the big range that we're in, I still think we're coming all the way down to 115, minimum. That depends on the equity markets, frankly. Okay. Hold on really fast. But that's what I'm thinking. Let's see here. Sorry, guys. Okay. Let's go back to the. I'm sorry, I was just making an adjustment here. So there's the dollar yen, and so we're looking at a flag pattern. Yeah, I guess 118. That'd probably be. You can see some support over here too, around the same levels. Should that flag pattern play out, we're gonna probably be testing a lot of the support down here. Let's go over to the Canadian. So the Canadian, really, and I thought we might be building a triangle on Friday. Yeah, I don't know. I mean, 123.50, as you guys probably recall, big, big, big support down here. Okay. 128 to 123.50. We'll have horizontal support right here at 124. So, and then we have IVPMI today too, which we can't forget about, out of Canada. So support's going to be 124 and 123.50. Whoops. 1.2350, which is mega support. 124. Okay. And then where's resistance? So resistance on the dollar Canadian, you can see we're just kind of hovering around these lows too. Hmm. Hmm. Well, I know. I mean, the IVPMI. First of all, the IVPMI is a pretty volatile number. All right, we can. It can jump quite aggressively up and down. So what that means is whenever you have an economic data release, if it is above or beyond expectations, above or below expectations greatly, it can produce volatility, right? And if the IVPMI number has the propensity of being really above or below expectations, it could create some volatility. So if that's the case, and we have, like, let's say in this case we have a weak number, could we actually get back up to 125.50? It's possible. Okay. Um, so with that being said, as long as we stay below 125.50, we're testing the lower end of the range seems very realistic. We get back above 125.50, then we're just going right back into the upper end of the range. This is all about range environments in the dollar Canadian. I mean, we've been basically doing it all year long. Okay, so so resistance is really 125.50, and we are still in a big range. Yeah, I'm going to do the Kiwi really quick, and then I'll put you on break for the Aussie and the dollar index, and then when we'll come back. But let's go back and let's go over to the Kiwi really fast. Now the New Zealand dollar was just above 96 cents just moments ago, or 76 cents, excuse me, just moments ago, and okay. Oh, what a disaster, huh? Hmm. What to do here? Because I really don't know. This is like, when I look at these charts, it's okay not to know. I mean, I look at these charts and I feel very uninspired right now, as far as directional. Um, we've been ranging for so long in the dollar, and a lot of these dollar pairs that, like I said, it's very uninspiring as far as how to trade them. Like, here's the Kiwi. I mean, we stopped at the 786, which obviously that's resistance now. At 76.30, right? But do you really want to short it here? You know, uh, I don't know. I don't know the answer to that question. I mean, do you short it with stops above here, or do you wait for it to dip down to 75 cents to play it to the long side? I think that those are your two options at the moment. You come back down here and try to play it down at 75 cents. Oops. Ah, did not want that. Okay. All right. So 76.30, 75 cents, and yes, we're very much in a range. I'm just seeing if there's anything else that I could really do here with the Kiwi. Maybe we're doing something like this. Who knows? I mean, we are consolidating. All right, guys and gals. So when I come back, we're going to do the Aussie, and we need some time to do the Aussie as well because we have the RBA tonight. We have retail sales tonight out of Australia, so we got a few things. Um, so, and then we'll do the dollar index. So when I come back, we'll continue on. Don't go anywhere, though. Back in a few moments. All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. Glad you guys can all make it here. And we are going to go into the Aussie dollar and finish up with the Aussie, and then do the dollar index. So here's the Aussie dollar, and quite messy at the moment. Okay, so the Aussie didn't. Remember last week we didn't close below its new 52-week lows or whatever the multi-year lows. I remember we were at lows from 2009, and what we did is we came back and we retested a 38% retracement. So let's review kind of what happened. All right, so let's go over to the and you can see these. Here's the lows. Okay, we came right up to the 38% retracement. Okay, which is 76.83, and I figured we were going to come back and test 76.60. Okay, and we did. We came back and retested that 76.60 level and tested the 38% retracement and kind of failed from there. Now this is going to be really critical resistance for bears, myself included. I have an Aussie dollar short. I don't think I'm going to keep both my Aussie dollar and my Aussie yen short going into today's RBA. Now the RBA is expected to keep rates unchanged. There are probably about 50% of the analysts that expect that maybe a little less, that expect that the RBA could lower rates. I'm in the camp that they will eventually lower rates. I just don't know if they're going to do it this meeting. So it's going to be a tricky one. And like I said, if I was confident that they were gonna cut rates, I would probably keep both the Aussie yen and the Aussie dollar short. I might actually keep them both. I might just reduce my positioning in both, until after the RBA. But it is going to happen tonight. It's going to happen while I'm sleeping too. That's the other problem that I'm dealing with, is I will be asleep when it happens. But it is tonight around, I think it's 12:30 Eastern, if I'm not mistaken, tonight. Okay. Let's take a look at the well, here's the 38% retracement. That is resistance, key resistance, which will be, we're just going to write 76.90. And my positioning is small from last week. It's the same. It's the um, oh, you know what? I was like, wait, that's not the positioning I had last week. I actually added to it on Friday. I added to this one a little bit. That's why it skewed my positioning. Well, my position's still not very big. It's less than a half size. I'm like, it was third size last week. I shorted a little bit yesterday on Friday on that spike up. So I'm like, why is my cost average? I just looked at my cost average. I'm like, why is my cost average at 76.45? Because my cost average from last week was 76.08, and I must have pinged it at the highs. I'm like, oh, well, that's good. All right, so but my position's actually still really small. Anyway, to make a long story short, I think retracing, it's hard for me to retrace what happened a few days ago. The 38% failure is probably what got my attention. Anyway, but like I said, I doubt I'm going to stick around in as much Aussie short as I have, which isn't a lot, but not knowing what the RBA is going to do, tonight, and the market pretty unsure of what they're going to do. I will tell you, if they lower rates, um, if they do lower rates, it is going to put a lot of downside pressure on the Aussie. And although I don't believe that the RBA is going to start down the road of like a new cycle of lower rates, I believe this is going to be a one-off. I think the potential of the RBA continuing to lower rates after uh, they cut will still be quite high if they do, and so that's probably going to keep the Aussie under a bit of pressure, at least on the crosses. So anyway, the Aussie, I think we have to be careful between the 75.50 and 76.90. And I know we've been as low as 75.30, but 75.50 is still really important support. We couldn't hold these prices down here, so 75.50 is going to be support. All right, let's take a look at the dollar index. All right, so here's the dollar index. We had drawn out last week this triangle, but obviously non-farm payroll, we slipped below the lows. And take a look at the recovery, which has been really interesting. Let me get rid of this fib first. Let's get rid of that. We don't need that right now. All right, so we slipped through the bottom of this trend line. We bounced and we're retesting the trend line currently. So it's a broken trend line. We're retesting it, which means that, we're probably going to stay below, this trend line that now comes in at 97. It's previous support as well. So 97 is really key resistance for the dollar index now. That's key resistance. Yes, we're still in a range. Oops. And support, I mean, let's so that 618 is holding right now. You can see low to high. I know we've already been down here once. Down here again, 618 still holding. Okay. So that's important support for right now. The low here. So we've been as low as, I'm looking at the lows, 96.40, 39, so 96.40. And if we do break below that, be 96.15, I think. 17, yeah, 15. Okay, so those are your two levels of support for the dollar index, 96.14 and 96.15, or 40 and 15. So 40 is right here. And then 96.15 is down here. Okay. Both decent levels of support. The dollar seems pretty boxed in at the moment, but that's, currently what we're dealing with. All right. And, that's pretty much it. Let's see if I can take some of your questions. There's your bias chart, and let's get to your questions this morning. So, hold on 1 second so I can see what time was.